And of course, what we're looking at here is a standard trial account to PowerOptions. Naturally, of course, you can see that we're designed as a tab navigation system to various tools, the portfolios I mentioned, signature tools, things such as volatility skew, market sentiment, spread chain, long option finder, and then the strategy tabs where you can access potentially picks of the day, available for naked puts and covered call positions, as well as bull put credit spreads, or just the general search to use other defaults to identify positions, or create your own search based on the criteria that you want to see. I want to start off today, of course, discussing that market sentiment tool I mentioned. You can access that under the Signature Tools tab, but it's also one of the pods that are available to view when you first log on, as you can customize the main home view. I have the ETF gainers and losers, watch list, next live webinars, general market activity, earnings announced today. Schlumberger, of course, was up there, ex-dividends today, so on and so forth. With the market sentiment tool, we've seen this going into the red recently. And we saw some pullback on some big name stocks yesterday due to various earnings announcements that we know of, and the day before. But we're still kind of in the red. There's been some easing off slightly on the market sentiment tool. We're only seeing 6 bearish criteria. 7 are at neutral of the 13 preferred criteria used in the market sentiment tool. And we have no bullish warnings at this time. If I click on View Indicator Details, we get into oh, it just changed. How about that? It just updated when we did that, and it went to neutral. But we can see the 13 different indicators that we have here. Put-call volume ratio across the entire market. Number of days up in a row for SPX, the SPX gap over the SMA 20, percentage of total stocks trading above their 20-day simple moving average as well. Percentage of new stock 52-week high-low ratio. Measure of the VIX, almost down into the bearish realm as well. Trend, SPX, RSI, and several others related to SPX. Percentage of stocks, across the market that are above their 100-day moving average, and the size of the MACD gap on SPX as well. Going into the view overall sentiment history, there we can see on the 18th that we hit that very bearish sell warning, where we were at 7 bearish indicators of the 13 that are used, and 6 that were neutral. We haven't seen any bullish indicators in some time. Now, is this saying that a market pullback or a market decline is inevitable? Well, historically, that's what we typically see. What we're looking at here on this graph, it might be a little bit confusing here. Let's kind of shorten it up to see some of these time frames. I want to be right about there. So the last time we sort of hit bearish sell warnings, well, SPX was trading right around 43, 4,200 back in 2022. There's some more that are in there as well. I'm just highlighting this one, as you can see. So we triggered 2 of those darker bearish sell warnings within a 5 to 6 day period. And we were hitting sell warnings all along that line, as of course the market as a whole was moving up. And these 2 bearish signals, the bearish sell, the darker red ones, when I see 2 of those in a row or 2 of those in a certain time period, that's when I usually start considering to add extra hedges to the positions. Even the married puts I might have open that are already protected to a low risk or might only be bulletproof following the rules in the blueprint. But if I have bull put credit spreads open, calendar call or poor man's covered call positions, other bullish strategies, I'm going to want to start considering maybe lightening up on some of those winning trades, taking them off the table a little bit, taking some of the profits maybe a little bit earlier than I would have, adding a protection or hedge to maybe some of those poor man covered calls or other bullish strategies. And on the married puts, well, I already have the put in place. I might consider moving the put up to lower the risk and then selling premium at those higher levels to try to get to a point in anticipation of a pullback where I might be able to buy that premium back at a lower price. So it's not saying it's imminent, but usually what we see is typically sometime in the next 10, 12, 15, 20 days or so, you start to see a decline and a pullback once you start to see those stronger bearish sell warnings. Usually look for about 2 in a row, as I mentioned, in a 5 or 10 day period. Now, let me go back here. Let's go forward a little bit. I see that decline there. And we see some other hesitations going in. And you can see also the opposite happens. When you start seeing the light buy to strong buys, when SPX is at a lower point, and it's been low for a time, and you start to crash into these light buy, bullish buy warnings, you typically start to see an uptake as well. This is not a major one in this case. It's about from 3760 to, roughly about 4,000. It's pretty decent. And then hesitation, but then propping up just about less than 4,100. And of course, then you see the declines here where those different results are being triggered. And let's see, let me expand this a little bit so you get a better view. Let me clean up my drawings, folks. That'll help immensely. And so here, when we got back down below 3,900, based on what the market has done, you started to see those strong buy warnings. That was back in April. Now, let's look at the history a little bit more. I think it was end of March. So there's another one at 615 there when we were at 44.25. And didn't have a major pullback. We climbed back up, but we were pushing back down into the 43s. And then we climbed up again. We're starting to see those bearish sells. So it had to have been, let's see if I can go back. Sorry for the scrolling here. There we go. Those were the bullish buys we started seeing on March 10th, March 13th, and March 15th. Reverse of what we're seeing today. There's 7 bullish signals, 6 neutral. That's when we were at that 38.90 we were mentioning, 38.61. Back down in this time frame, and we've had the run up since then, but started to hit some bearish sells. There's a fast one, actually, if you can see it. Triggered into one bearish sell warning here right as the market was peaking at 4,400. Didn't pull back much, but it did hesitate. And then it started to go again. Now we're starting to see those bearish sell warnings one more time. So this is just something to use to help you with saying, hey, it may or may not give a drop. Typically, we see that it does. And typically, when we see the bullish buy warnings, it typically means we might start loading up on new myriad put positions, new calendar spreads, buying calls, buying leap calls, maybe on stocks that have been depressed, larger name stocks, for example, high market cap stocks that have been depressed. So it's just another way that you can potentially use this as a gauge to help with trade entry, perhaps. If you're going into more aggressive bullish stances, you might want to wait until you see those strong buy recommendations, or those, not recommendations, I shouldn't say that, the strong buy warnings that we saw before. Right now, I was looking to open a few more myriad puts this week, but we started to see those bearish sell warnings, so I wanted to hesitate a little bit. Now that we're at neutral, if we stay in neutral next week and maybe we ease off or just temper out a bit, then I might consider it, but we're not seeing a strong buy warning yet. We just eased off some of the vals with today's market conditions, dropped down from that 7 down to that 3, and we're at 10 neutral, but we're not seeing really any bullish indicators at this time after the strong run we've had, essentially since the last bearish sell warnings went off back in mid-March, as we saw. Of course, in the free webinar section, I believe under option strategies, well, there's that discussion we did have the last time we saw those strong buy warnings, market sentiment tool and current indicators from March 10th, 2023. And let's see, is it under option strategies? Now, there's probably another one in here in the PowerOptions tools where we talk about what ways might we use the market sentiment to help us with the protection of the position for different commonly used option strategies. What might we consider using when we start to see those bullish buy warnings or those bearish sell warnings as well. Now, of course, I could also go to our PowerOptions YouTube channel, and I can just do a search here for market sentiment. If I could spell correctly, folks. Hold on one second. Let's get this over here. There we go. I hit the equal sign, not the back sign. Sorry about that. It's covered there. Strategies for using the market sentiment tool. Using the market sentiment tool for call or put buying. Current indicators. Using the market sentiment tool for adjusting and placing trades. So there's some short videos here, 7 minutes long, 14 minutes long, 6 minutes long, and 20 minutes long. General concepts, general ideas, of course, of the market sentiment tool, how to read the market sentiment tool, of course, a little bit more in depth than what we just covered in the last 10 minutes or so, and how we here at PowerOptions might use that tool and those sentiments to help us adjust existing positions. manage or add a hedge to existing positions or the portfolio as a whole. And in addition to that, using it for certain techniques to maybe trade entry or others as well. And of course, one of the discussions we had last week, the discussion on VIX call buying. As we've seen, of course, the VIX is now back to lower levels as the market is hitting higher levels. So we're seeing the VIX stay around this 13 to 14 range, which we have not seen in a long, long time. We covered that last week. So one way to hedge a total portfolio, especially if you still have bullish positions, but you're worried maybe about a correction, you're worried about a small pullback over the next 10 to 15 days after this run, one hedge that used to work well when volatility was at this levels was to buy calls on the VIX. As the market starts to turn, the VIX will start to move up. You can use those leverage calls as a way to hedge a bullish spread portion, leverage spread portion of your portfolio, or portions of a bullish portfolio as well. Of course, you can also just buy puts on SPY, QQQ, depending on how your portfolio total is weighted. If you're weighted more into tech, you might look at QQQ. If you follow more of the Russell types of stocks, you might look at IWM. And of course, you might use DJX if you're heavy in the Dow, if you're heavy in more of the blue chip stocks and things of that nature.